Hello, it's a pretty lovely good evening once again from here in Delhi, and hope as always that each one of you are keeping absolutely fine, happy, and of course in fine spirits. So today in this particular session we are going to have, as per your demand, lots of demand I was having and lots of messages I was having since the day of the examination itself. Correct? But sometimes you need to be a little bit patient. You need to show a little bit of patience. Correct? So anyway, so here we are, and today we are going to discuss the paper, CFR final examination paper. It was held in December 2024, as you know, and now you are absolutely free. Regarding the review, I will talk about it later. But first, I am directly going to come over to the business end. And I do not know actually how many among you are present over there. Those among you are present, kindly let me know, and let me also know whether I am audible or not. Whether I am audible or not, kindly let me know of that. Those who have just joined and who are associated with us through SAS system, waiting for the green signal to get on so that we can connect with them too. Just give me a single minute. Yes, now the green signal is also on, and we welcome all those who have just connected with us, correct, through SAS system also. And I do not know how many through YouTube system are connected with us at this particular moment. And KMK thought, right, audible sir. Now this is the first information I have so far. Now K Nandani says audible, so we welcome each one of you. So what exactly was the level of the paper? What exactly was the sort of paper? Whether the institute has done quite well, commendable job or not? We'll talk about all this later on. But first we come directly to the business end, and here we are, and we are going to simply take care of this particular fact that you get the most reliable, most trustworthy, and most standard answers. I hope you are going to agree with me when I say that you can hope to get most reliable, most authentic answer, because I'm not one of those actually who's simply going to actually jump in the race that to what we call give a review on the paper. We always give the full-fledged solutions, which institute will never ever give you. Full-fledged solutions, as you know, institute has now stopped giving you, and perhaps I'm the only faculty who always takes the lead in giving you the what we call complete solution, and most probably what we call the most reliable one too. So on that count, here we go, and in between, and it's nice to hear from KMK Thors that he agrees with me in this particular account. So let's have a look. This is your paper. I hope each one of you are also carrying along with you the paper also. I have also printed the paper, so you must have seen actually how much effort actually we are putting up in printing the paper, in printing the entire solution, and first of all solving the paper. So all these require huge efforts. But anyway, let's come straight to the point. So here is your paper, CR final examination paper, December 2024, and lovely good evening to everyone. Correct? This is section A, compulsory section. As you know, it comprises of MCQ, and each question commands what we call 2 marks. So 30 marks. I hope each one of you must have been immensely benefited by the revisionary sessions which we had. And we received lots of messages, and it gives us immense satisfaction. In fact, tremendous what we call satisfaction that our regular courses and our what we call revisionary sessions were extremely hit and were appreciated by the student fraternity. For that actually I owe you a big thanks. Anyway, now we come directly. Now what is your answer to this particular question? This is your first MCQ which we are picking up now. The external revenue reported by operating segment constitutes dash of the entity's revenue. Additional operating segment should be identified as reportable segment. Right, now you'd let me know what was your answer. In fact, I have already written here the answer. Your answer will be A. This particular question should not have given you any trouble, I'm quite sure. I hope each one of you have done it correctly. And now we come over to the second question. If you remember, this question was as it is from our question bank which we gave you in the last session of our revisionary session. Consolidated financial statements are required to be prepared by an Ind AS compliant company if it holds share in the investee company. So what was your answer? First you let me know without having a look over here. What was your answer? A, B, C or D? What was your answer? Kindly let me know of that. You take your time, no problem. I have got lots of time today, in fact. Actually, I get free only by 8:45 in spite of my what we call very heavy and squeezy what we call schedule. But since I committed to hold the class, even though I'm very tired and it's pretty cold out here in Delhi today, So what was your answer to this particular question? Answer D. Correct? And we explained it thoroughly, this particular question, during our revisionary session also. Which of the following is not a feature of government accounting? Your answer will be D. I need not require to tell you, because first three are the features of the government accounting. It's the non-fund based accounting. It's the double entry system, adherence to the government regulations. All these are very much features of the government accounting. And transacting through banks is not a necessity. So that is not considered as a feature. Fourth one. Which of the following is not a general principle of government accounting? Even this question we discussed, if you remember, actually in our what we call MCQ session. So your answer will be D, single entry system. First of all, you let me know, actually, are you having the what we call a question paper in your hand or not? Are you having the question paper in your hand? Are you having the question paper in your hands? Okay, you didn't give the answer. Why didn't you give the paper, actually, KMK? I must say, actually, this was perhaps one of the most easiest paper. Anyway, you will always get now paper like this in future too. Don't worry about that. So single entry system is your answer. Anyway, still you must be having the what we call copies. I hope so. And let's have a look over the fifth question. And keep on answering that. That actually gives me a sort of feeling as if I am in the regular class. At what value is non-controlling interest is recorded in the books of acquirer company at the time of business combination transaction in days 103? As you have already gone through this particular question, isn't it or not? So at what value non-controlling interest is recognized, as you know, either on PSNA basis or on what we call fair value basis? So your correct answer will be it is recognized either at fair value or proportionate fair value of identified net assets. Is it clear to you or not? So this is the situation. And then sixth one, financial assets are. In fact, this question we did in our regular sessions, correct? Now you let me know what was your answer. The answer will be D, all of the above: cash, equity instruments, and contractual right. Even this question was there in our MCQ base. Nearly 95% question from our MCQ bank were there in the examination. I hope actually you would agree to it. Of course, the answer will be equity instrument, because an equity instrument is a contract that shows the what we call interest, that shows the evidence in the residual interest, isn't it or not? Now coming over to the what we call eighth one, those among you who have gone through the theoretical notes, this question shouldn't have given them what we call any sort of trouble. Actually, the answer is human resources, correct? Now we come over to question number 9. Even this particular question and this sort of question we covered under what we call our revisionary sessions. So the answer to this particular question will be C, expenses 5 lakh and intangible asset 55 lakh. I am not simply solving it at this particular moment, because these are objective sort of question, and I hope that each one of you could have done this. Is it clear to you? We'll talk about that, no worry about that. Expenses of 5 lakh and intangible asset 55 lakh. Is it clear to you? This is part 9 I'm talking about. Expenses 5 lakh. Why? Because in this particular question it is stated that your current accounting year, the year which is given to us, is 1/4/2023, and year is ending on 31/3/2024. And it is given in the question that Milky Way Limited is conducting a research in respect of attaching a self-charging batteries in all of its vehicles, and it has already incurred 15 lakh last year in this research. During the year, it incurs what we call 5 lakh each month. See, we are not concerned with the last year, correct? First of all, we are more importantly concerned with the current year. In the current year, their expenses given to us are 5 lakh per month. Their expenses are given to us 5 lakh per month. Is it clear to you or not? Right. You are absolutely right, because what we did in the session, that was that comprises of what we call Institute's question bank. As I told you, most of the questions were taken from your question bank itself, no doubt about that. 1/4/2023, 5 lakh. And here it is given in this particular question that on 1/5/2023, on 1/5/2023, actually, the director found that research is successful. So that means in the current year, because question is asking you in the current year, as on 31st of March 2024, what will be your treatment? So you need to understand in this particular case that whatever expense which you have incurred prior to the fact that this particular research has met the asset recognition criteria. So such expenses, as you know, such expenditure will be expensed, and after this it will be categorized as an intangible asset. Because your expenses are 5 lakh per month, that means total expenses which you must have incurred during the entire year must be equal to 60 lakh, and out of 60 lakh 5 lakh will be expensed, so 55 lakh is the value at which you are going to recognize the intangible asset at the end of the year, isn't it or not? Then 10th one, given by the Puamart. What was your answer? First, you let me know of this. Which answer did you take to this particular one? Given by Puamart, average trading profit of the last 4 years is 7 lakh. Very simple question. And average capital employed by the firm is 45 lakh. Normal rate of return is 10%. Present value of annuity for one. Now, to some of you, this particular line might have what we call struck a bit of surprise, but it is not at all a very big surprise. The value of goodwill on the basis of annuity of super profits you will have to compute. So in simple words, first of all, you need to compute the super profits. Now average trading profits are given to you. So in order to compute the super profits, first you are going to write the what we call trading profits. You will take the what we call 10% of your average capital employed. So that will deliver you normal profits. The difference between these two will give you super profits. Your super profits will be equal to 2,50,000, and then you simply multiply it with the present value. So your answer will be 7,92,475. 7,92,475. Is it clear to you? Now, in this question, this sort of questions, correct, this particular question was not covered by your module. Let me tell you very openly, but we have covered in our regular classes and even in our revisionary sessions. So if you have gone through Ind AS 116, I told you how the accounting is done in the books of lessee, in the sense that means at what value lessee is going to recognize the leases. At what value he is going to recognize? He will recognize the lease liability, and simultaneously he is going to recognize the right of use asset. And remember one thing, in this particular question, many among you in the heat of the examination, which I keep on telling you even during my what we call regular sessions, that you must pay attention to each and every word of your MCQ before you start what we call attempting the answers. Correct? So see here. Here, Aura Limited leased a machine with a fair value of 1,65,000. Aura Limited leased a machine means Aura Limited is the lessee company for a period of 5 years under a finance lease. Now, the initial direct cost incurred in negotiating the lease is 1,250. Do you remember we talked a lot about what we call indirect cost, lease incentives, etc. And the present value of the minimum lease payment discounted at the rate implicit in the lease is 1,58,400. 1,58,400. That means the present value, I have already told you that lessee is going to recognize the lease liability at present value. So lease liability he is going to recognize at 1,58,400. But question is not asking this. At what value lease liability will be recognized? The question is asking, under the requirement of the Ind AS 116 leases, the amount for which the machine will be recognized. Now machine means the right of use asset. So that means question is indirectly asking you at what value right of use assets will be recognized. Now you let me know what should be your answer in this particular case. I told you we did lots of questions, if you remember, under Ind AS 116 in our both what we call revisionary sessions, in our what we call also regular sessions. I told you that in order to what we call find out the value of the right of use assets, first of all you are going to take into account the what we call lease liability. Lease liability is 1,58,400. And then you are going to add to it initial direct cost, You are going to subtract any lease incentive, etc., and lots of other things which I did in the class. So in this particular case, only 1250 is given. So initial direct cost, you are going to add it, and then you are going to get the answer. This is how you are going to get the answer. This question is not covered by your module, and some of you are claiming that everything was not from module, but I will tell you so many things were also not there in your module in this particular question. That is why you need to actually have a reference book or a study material which encompasses such thing. Those among you who have subscribed to our course cannot point a single question which didn't come from our module or which we didn't cover. Although majority of the question MCQ were from your question bank, MCQ question bank, no doubt about that. So 1,59,650 will be your answer. This is your answer C. Is it clear to you in this question? Now let me know. Be honest. There is no harm in what we call accepting, even if some of you might have committed some mistake. Let me know actually how many among you actually did it correctly. How many among you did it correctly? I'm sure that some of you might have ticked this one, but actually the answer is this one, 1,59,650. How many? Everyone did it correctly? If you have done it correctly, it's very nice of you. If you haven't, then also no problem. Sometime it happens. Okay, now we come over to point number 12. A Limited has a machine whose original cost is 1,20,000. The accumulated depreciation on the machine is 45,000. Yes, now Rahul Jaju says that I did wrong. I knew that. Rahul, did you attend actually my regular sessions, my revisionary sessions or regular sessions? Yeah, I know that some of you might have got confused. If you would have attended our what we call sessions, I'm very sure you would have got the correct answer. So that is the reason actually I told you. But actually, problem is that most of the teaching faculties nowadays actually they do not take into account that they need to tell to a student each and every point in spite of the fact whether it is given in module or not, because nowadays I will tell you actually where exactly the questions have been taken and you will be surprised to say it. I know the sources. I will tell you, but later on. Anyway, so 12. A Limited has a machine whose original cost is 1,20,000. Accumulated depreciation on the machine is 45,000. Similar machine has recently been sold in a locality at 65,000 with a selling expense of 4,000. Correct? Management determined the entity specific present value of cash flow of the machine as rupees 68,000, and it's a very simple question and you are asked to compute actually impairment loss. Now in this particular question you are already given original cost, you are given what we call accumulated depreciation. That means you are having at your disposal carrying amount. You subtract what we call 45,000 from 1,20,000, which I have done it for you also. So 75,000 will be what we call your carrying amount. Now you have to compare it with the recoverable amount, and you know that recoverable amount happens to be the higher figure between what we call fair value less cost of sale and what we call your value in use. Now in this question, your fair value less cost of sale will be 65,000 minus 4,000, that is 61,000. And value in use, because it is given clearly that future benefits from this particular machinery is 68. So out of 61 and what we call 68, obviously 68,000 is higher figure. So we can say that carrying amount is 75 and 68,000 is your recoverable amount. So difference between these two obviously will be your impairment loss. So your correct answer will be 7,000. That means part D. I hope each one of you must have done it quite well. Correct? K. Nandani said, sir, I did it correctly, and thank you very much. Those among you, don't worry about that. Sometimes mistakes also happens, but you did it correctly. That's great. And even though some of you have committed mistake, there is no harm in it. The biggest thing in life is that we need to be always alert that the mistakes which we might have committed in whatever sphere in the life, we should not repeat it again. That should be the basic task. Okay, it's nice to hear that everyone has done it. Most of you have done it correctly. Anyway, we move over to part 13 now. As far as part 13 is concerned, I'm not going through the question. If you remember, this was the question we did it in the class also. I'm simply telling you the answer. Answer is B, 85 lakh, because there is no point in going through this particular question. I think it is enough. Correct, 85 lakh, and I have solved it for you also. In this case, your net identifiable asset is equal to 775. Your NCI at fair value is given to you at 90, and your share of acquirer will become 685, and your consideration is 600, because amount of consideration is less than the share. So that is why the difference will be considered as your gain. So 85 lakh will be your gain. Correct. Now we move over to 14. If you have listened to, especially I'm talking to those students who have subscribed to our regular classes. In the very first class, whenever I pick up the topic of India's 103, I always talk about some significant and basic facts. And over there, I have explained it very, very clearly that as per Ind AS 28, if an entity will prepare what we call financial statement, correct? And generally it is prepared when we are having an associate or when we are having a what we call joint venture. So we use the equity method. So your correct answer in this case will be equity method, but I'm sure it will be done correctly only by those who have subscribed to our regular courses and who have listened to very carefully the very first session. Is it clear to you? And as far as 15th is concerned, in this particular, again, it's a very simple question. Mogari Limited provides the following financial data for the year ended 31st of March 2024. Now, the net operating profit before interest and tax is equal to 17,50,000. Net operating profit before interest and before tax is given to you. Whereas in order to compute, because ultimately we are supposed to compute economic value added. As you know, in order to compute the economic value added, we need net operating profit before taxes, before interest, but after taxes. So here at this particular moment, we have got net profit before interest and before tax, 17,50,000. Your total capital employed is given to you as 80 lakh and corporate tax is 30%. Correct? And weighted average cost of capital, everything is given. So it's a simple question. First you write whatever profits are given to you. These profits are before interest and before tax. Now all you have to do is to subtract the amount of what we call tax. So now you will get NOPAT. NOPAT means net operating profit before interest but after taxes. So this is your 12,25,000. Now you simply subtract the cost of capital. In order to compute the cost of capital, you will take the capital employed given 80 lakh, multiply it with weighted average cost of capital. It will be equal to 960. The difference 2,65,000. So I'm sure that most of you must have done it correctly. Is it clear to you or not? Anyway, so it is nice. Now, I'm very sure that no one among you must have gone for question number 2. You tell me very openly, how many among you have gone for question number 2? This question is not from your module. From 2A, no such question is given. This question has been taken from past examination of what we call CA. Correct? This question number 2A. But those who have done our regular courses, they shouldn't have faced any problem. And while this question, part B, now you tell me, how many, openly you tell me. I'm very sure that none among you would have gone for question number 2, because both these questions can be considered a little bit tougher for the student, little bit tougher. I'm not talking about that they are of much higher level. I have solved all the questions, let me tell you. If you want the net answers right now, I am giving you the net answers, but I will explain each and every question and solve in class also. But first I am telling you the net answer, because I am sure none among you have gone for question number 2. So first I am taking question number 3. I will solve question number 2 also. This is your question number 3A. Correct? I'm leaving question number 2 for a while, because I'm sure that many among you might have not gone for this particular question. Now, this is a very simple question actually. In this case, yet again, this question, see here, I have written almost similar to question number 2.17 of our study material. Only thing is that here the figures are doubled. Correct? Z Limited granted 100 options to each of its 100 employees, conditional on their continuing in service for 3 years. Fair value of the share option on the grant date is 30. During the first year, 36 employees left. Now it is given to you that at the end of the first year, 36 employees have already left. Further, it is given, entity revised its estimate of total employee departure over 3-year period from 20% to 16%. Actually, what would have happened in the beginning? and generally it happens whenever an entity actually announces the share-based scheme. Correct? For instance, in this particular case, this entity has already announced in a scheme that it will provide 100 share option to each of its 100 employees at a fair value of what we call 30. So when this scheme was announced, at that time, this entity might have been under an opinion that nearly 20% employee would leave the scheme by the end of the what we call vesting period, which is 3 years. Because generally it happens, because whenever we announce a scheme, we also estimate through our past experiences that how many employees ultimately will be there at till the end of the vesting period. So this line, which is written over here, that this entity revised its estimate of total employee departure over 3-year period from 20% to 16%. What does it mean? That means this entity in the beginning might have thought that 20% employee would leave, but now at the end of the first year, now entity is of the opinion that only 16% employee will leave till the end of the what we call scheme. Is it clear to you? Further, it is given, actually my throat is not well today, it's pretty cold out here, I've already told you. During the second year, a further 40 employees left. Now at the end of the second year, further 40 employees left the scheme, and further it is written that entity revised its estimate of total employee departure over 3-year period from 16% to 13%. So when entity reached the second year, now entity thinks that only 13% employee will leave over the 3-year period. Over the 3-year period. What does it mean over the 3-year period? I will also let you know, although in my regular classes I have already explained this one. During the third year, a further 28 employees left. Now at the end of what we call third year, 28 employees left, and all the continuing employee exercised the option to subscribe the equity shares of 10 each at rupees 50 only. Correct? When market price stands at 84. Actually now this particular line is irrelevant because it is clearly given that they have subscribed the share at the rate of rupees 50. Now past journal entries for all the shares. Now I tell you how to solve this particular question. First of all, see here, this is the analysis of the question as we normally do. This is the beginning, first year end, second year end, third year end. This is not the solution, this is just the analysis. On the grant date, I have already told you there are 800 employees and entity has already committed that we are going to offer 100 what we call options. And fair value is 30. Now it is given in the question, see here, pay attention. At the end of the first year, entity revised the estimate departure rate from 20% to 16%. That means at the end of the first year, now entity thinks that by the end of the third year, 16% employee will leave. So what does it mean? Because we have 800 employees and we are under an impression that when we are going to reach the end of the scheme, that is at the end of the third year, that means 16% employee are going to leave. Is it clear to you or not? So that means in total, now we are under an impression, if I am going to compute 16% of 800, I am thinking that out of 800, ultimately 128 employees will leave the scheme. Ultimately, 128 employees will leave the scheme. Are you getting my point or not? When I am at the end of the first year. But at the end of the first year, it is also given that actually employees have left already 36. We are estimating that 128 employees will leave the organization. Correct? Ultimately, that means when we are going to reach the end of the third year, in total 128 employees will leave. And at the end of the first year, 36 employees have already left. So if I am going to subtract from 128, this 36, it means expected employee who would leave the service, because actually 36 have already left. So expected to leave will be 92. So total will be equal to 128. Are you getting my point or not? Is this point is clear to you or not? Is this point is clear to you or not? See, current year's paper was much easier in comparison to any of the paper which were asked. And I'm going to talk about the review and the level and the commendability and the trustability of the institute at the end of this particular session. But first pay attention over here. Correct? I hope this particular point is clear to you. Is this point is clear to you or not? When I am saying that at the end of the first year, 36 employees have left and expected to leave is 92. I hope you got this one. Let me know of that. Even though I am taking the classes for the what we call paper solution, still I want you to understand it comprehensively, and that is why I am asking here. Yes. No one is giving the answer. Those who are joined us, those who have joined us through SAS system, they are delivering the answer. But from Jaipur, from Bala, from Bhilwara, lots of students are from Rajasthan. It seems actually now the first one is from Chennai. Yes. Right. Okay. Now it seems that everyone has got it. Now we come over to the second year. In the second year, it is given in the question that entity revises its estimate to 13%. That means now entity thinks that whatever employees we have got, total 13% employee will leave. Now you will compute 13% of 800 because total employee in the beginning are 800. And now you think over a 3-year period, 13% employee will leave. So you apply 13% to the employees in the beginning. That means out of 800, now you think only 13% employee will leave. That means at the end of the second year, you are under an impression that 104 employees are going to leave the organization. But at the end of the third year, you are under an impression total 104 employees will leave. But out of that, pay attention, out of 104, 36 employees have already left in the first year. 40 employees have already left in the second year. Because it is given in the question that employees left in second year is 40. So that means now you expect 28 more employees are going to leave the organization. Thank you. Thank you so much, Revanti Gemini. Because I have seen you so many times on CMA fraternity, but it's nice to have your appreciation. I must say, if you really find my classes absolutely fine, it is so nice of you. And I hope that you are going to popularize me in your groups where you are associated also. This I expect of you. And thank you so much. It's nice to actually, whenever students find good faculty, honest faculty, because whatever we do it honestly. That's the only thing. And finally, in the final year, 28 employees have left. Now, I know that some of you are very impatient to know the answer. So, see, this is your solution. At the end of the first year, 800 employees were, now we are doing the computation. This is your answer. 800 employees in the beginning, employees actually left 36. I told you actually, now expected to leave is 92. How we computed expected to leave, I hope you got it. Ultimately, I applied here 16% of 800 and I found out that total 128 employees would leave. Out of 128, actually 36 have already left. So that means 92 more employees are going to leave. Isn't it or not? So 672 employees will be there. Multiply it with 100 and your fair value will be 30. So 20,16,000 will be your total expenses. And then you divide, proportion is 1/3. So cumulatively at the end of the first year, you are going to book this much of expense. But earlier recognition is 0. So in the current year, that means in the current year, this much of expense you are going to book. Similarly, when you are going to reach the end of the second year, your computation will be like that. You are having 800 employees. By the end of the second year, how many employees have actually left? 38. Actually, it should be 36. Correct? 36 plus 40. 36 have already left in the first year and 40 have already left in the second year. Total 76 employees have left and you are expecting that 28 employees are going to leave. And how you computed actually 28 employees? I told you when you are in the second year, you are expecting that 13% employee finally are going to leave the organization. That means you are under an impression that 104 employees will leave. But out of 104, 76 have already left in first year and second year. So that means 28 employees are there which you are expecting who would leave. So that is why expected to leave is 28. So now we get 696. Is it clear? KMK says, actually, honestly speaking, although I have a habit of saying in Delhi, earlier I used to live in Delhi. Right now, I am in my native place. Correct? Right now, I am in native place, to be very honest with you. Because Rahul Jadhav said, sir, is in Delhi, but I'm not in Delhi, to be very honest with you. Because it has become a sort of my, what we call phrase, that it's a lovely good evening from here in Delhi. Actually, even though I'm not in Delhi sometime. I keep on frequenting between my native place and into Delhi. That's the reason actually. Right now I'm in Ranikhet. It's a hilly area. It's a wonderful, wonderful place. If some of you have ever visited Nainital or Ranikhet, I do not know how many among you. Correct? And right. So, but often I keep on visit. Sometimes I come to Delhi for 2-3 months. Correct? So that's the reason. So this is your answer, 696 into 100 into 30, 20 lakh 88,000. So ultimately I'm telling you the net answers because I know most of you are interested only in the net answer. So these are your answers. Is it clear to you? And if you have got these answers, most reliable one, most authentic one, and most Rahul Jaju says you have visited one. So nice of you. It's a wonderful, wonderful place. Very bewitching, what we call beauty. And I'm a fan of hill areas, no doubt about that. 6,72,000, 7,20,000, 6,96,000. And very soon I'm visiting actually Kerala. Correct? And after that I will be going to Chennai too. So 6,72,000, 720, and 6,96,000. I hope. Now you tell me honestly how many among you got the answer. How many among you got the answer? 672, 720, 696. So, and this will be your entry, employees compensation expense account debit to share based payment reserve account, correct? 7,20,000, 6,96,000. Obviously, these questions, when I'm going to take revision classes for later on after 3-4 months, correct? Then obviously over there I will take all these questions once again, and over there I will explain them in detail. That's a different matter. Revana Javani says actually you are from Telangana. So thank you so much. Actually, to be very honest with you, I think 2-3 months back I was in Telangana, and it is one of the fascinating places I have ever visited in my life in India. To be very honest with you, it is so neat, so clean, and so spick and span, and people are so wonderful. And a wonderful, wonderful place. I really thoroughly enjoyed my entire stay of, I think it was 10 days over there. So next time when I am going to visit Telangana, I will call upon you over there. Correct? I hope I can rely over there at least for 2-3 days stay. So this is the point. And at the time of share issue option, when you are going to issue the shares, please pay attention. What will be your entry? 696 are the employees who have completed the scheme. Correct? 100 options you are going to give, and employees are going to pay you rupees 50. So you are going to receive this much of money. Correct? And just leave it for a while, and then you are going to issue them equity share capital. So your entry will be 696 shares. 696 shares of 100 each, but do not forget to write the face value, because you are issuing the share at the rate of 80. You are issuing the share at the rate of 80 because you are giving a concession of 30, employees are paying you 50. That means you are issuing them share at the rate of 80. So 696 into 100 into 70 will give you security premium, and now you simply take the difference, or you can simply get it this way around. Share based payment reserve account. This is how you are going to pass the entry. Yes, Meghalaya, and to be very honest with you, actually I have a habit of visiting and traveling a lot, and I have visited Meghalaya also, and it's a wonderful, wonderful place, no doubt about it. And coming over to part B, I'm not explaining the whole question. Correct? I'm giving you the net answers because I know that at this moment you all are not in a mood for the entire solution. You are simply interested in the net answers. So I will record it later on, then upload it later on. At this moment I am giving you net answers. Now the net answer, those among you, I'm giving you a hint also. Intrinsic value is 17.505, and assets available for shareholder is equal to 35,01,000, and Rahul said, I got the answer. Great. And before that, you will have to do the computation of the goodwill, and your goodwill will be equal to 24,15,000. I am giving you the net answer. This is part B of question number 3. Is it clear to you or not? Correct? I will record these classes later on and I will upload it. Those among you who are interested in full-fledged in-class solution. Right now I am giving you what we call simply the net answers, because most of you were interested in having answers of the MCQ. So that's the reason. And this is your question number 4A. I need not require to tell you, this is absolutely the same question of NBFC of our study material. You can say so. So you must have got the correct answer. But if you remember, those among you who have actually attended our regular sessions of NBFC, over there I have already told you that most of the time in the examination you are going to get a question on provision based, and generally they are not going to mention whether the NBFC is a deposit taking NBFC or it is a non-deposit taking NBFC. Here you are required to compute the what we call provision. No doubt about that. But at the same time, it is not given to you. If you remember in my regular classes, I have already told you that NBFC are of two types. One, deposit taking, another one is non-deposit taking. And even under non-deposit taking NBFC, I have already told you there are some subdivisions. They are segregated into two more parts. One is significantly important. Generally, we call them systematically important and not systematically important. And generally, for the purpose of provisions, I have already told you that provisions for NBFC which are deposit taking, and which are not deposit taking, NDT, I am simply writing non-deposit taking but systematically important, are same. While provisions for NBFC, non-deposit taking company, and which are not systematically important, there is a slight difference. So it is always better to, before you solve the question, always write presumption that you are presuming that this is an NBFC deposit taking, or it is an NBFC which is not deposit taking but systematically important. Is it clear to you? So on that basis, your answer will be like this, because you are going to give a provision of 0.40% to your what we call standard asset, no doubt 10%, and then 20% to 350, 30%, 50%, 100%. I'm simply telling you the net answer. Now, if this would have been a non-deposit taking company and not systematically important, then only difference would have been, instead of 0.40, you would have taken 0.25%. Is it clear to you? I hope you must have done this question correctly. Next question is related to your internal reconstruction. I think right it is. So internal reconstruction I need not require to talk about. I'm simply telling you the net answers. Kindly simply have a look over here. 21,76,000 is your reconstruction balance. Your institute will give you only the net answers. I'm the only faculty, as I keep on saying actually, who give you always full-fledged answers. Correct? Thank you, KMK. And this sort of what we call your efforts and your cooperations are needed so that maximum number of students get benefited. That is our ultimate aim. How many among you got the correct answer? Let me know. Those among you who attempted internal reconstruction question, and your capital reserve will be equal to 64,000. Is it clear to you? I'm not solving at this particular moment. I have already solved, as you know. And one more thing which I will share with you later on. And the balance sheet total is 31,42,400. 31,42,400. It is matching perfectly. I hope that most of you must have got it correctly. Now this is another question, and once again this is the same question. Which is 7.2 of our study material. I'm talking about regular classes. 7.2. This is a reverse acquisition case. Even those who have attended our what we call revisionary session, even over there I did a question on reverse acquisition, if you remember. And this question is similar to this one. At this moment I am not solving. I'm telling you the answer. Simply your entry will be like this. You can simply have a look over here. This is the entry in this particular case, books of accounting acquirer. Correct? This will be your entry. You can have a look over there. You can take the snapshots and note it down. And your balance sheet total will be 57,600. And importantly, in this case, your other equity will be equal to 11,600. Gain on bargain purchase will be equal to this much. Is it clear to you or not? Because I do not want to consume your lots of time. I'm telling you, I will already upload a separate video where I will do the in-class solution, because you have already done the paper. There is no point in telling you solving right now here. I'm simply telling you the net answers, but comprehensive answers. Correct? We have solved the entire, unlike others. This. No, nothing like that. It is not in our habit. We simply give you absolutely what we call thing. And this was the question. This is the question which was taken from where? Could anyone among you tell me? This question is not in your module. You may say, sir, and this question is similar to the one which is there in our module. Correct? We have done a chain holding question, you remember, but this question has a slight variation. I must also say it, and it is not easy to do this question. Let me also tell you, but we have already solved this question here. You can see this is the entire solution before you. Those among you who have already done this question, I'm simply telling you the net answer. Your balance sheet answer will be 7833. Balance sheet answer 7833, and NCQ of Q will be equal to this much and NCQ of R will be equal to this much. I'm telling you these answer. Similarly, when you are going to compute the other equity, I'm also telling you all these answers, but the net answers which I'm giving you is balance sheet, and this is what we call NCQ, and other equity I have already given you. Consolidated general reserve will be equal to this much, consolidated retained earnings will be equal to this much, and gain on bargain purchase will be equal to this much. And at the same time, this is your asset side, and asset side is not going to give you any trouble. But this question is not easy to do, to be very honest with you. I will do it in a full-fledged manner, no doubt about that. Correct? I've already told you, I'm giving you the net answer because I know that students today are basically interested in the net answers. 7th A. This question need not require to tell, similar to question number 3 of our book, and this is much easier than that one, to be very honest with you. So I'm telling you the net answer, total value added, that is equal to 450. Total value added is 450. Correct? Now you tell me how many faculties have given you full-fledged solutions. No one. And for the next few months, no one will give you till these sheets will come into the public life. 450. Correct? 450 is your total value added, and this is the application. Out of this, you are going to apply towards employees 100, towards government 25, and towards providers of capital 130, sorry, and entity will retain 195. Total will match. Correct? And one student was asking me, and these are your theoretical question, and this is question number 8. Question number 8 has 3 parts. First 2 parts are theoretical, and the third part is 3.1 question of our book. I need not require to tell you, we did so many questions of business combination achieved in stages. However, this question, in my view, is not correctly asked. I'm not telling question is incorrect, but it is not correctly asked by the examiner. An institute must take care of such what we call mistakes. I tell you why. Because in this particular question, it is asked, calculate the amount to be transferred to profit and loss account in 2023-24, which is not possible at all. You cannot transfer any amount to profit and loss account in 2023-24, but question is asking. I tell you what is happening in this particular question. Year 23-24, question says that we have 35% stakes. A Limited is having 35% stakes. Correct? For rupees 3,50,000 in B Limited, and this is the amount which we paid for 35% stake, and the fair value is also given, that is equal to 4,20,000. I have already told you, because our fair value has gone up, and it is given in the question that this entity reported the increase in fair value in their what we call OCI. So obviously your entry will be, I might have given you entries also. Investment account debit to OCI account 70,000. But problem is that we cannot take this amount to profit and loss account in the year 2023-24, and question is asking in 23-24 how much amount you will take to profit and loss account. This amount is in OCI because it is clearly given here that entity has reported it under OCI. Unless and until these investment will be cancelled, you cannot retransfer it to your profit and loss account. So that is why this question is not correctly asked in the examination. Otherwise, rest of the question paper, I must congratulate the institute. They have given a wonderful paper. Every time we simply cannot criticize the institute. If they have done some job, very commendable. They must be appreciated. Very much inside of my heart, very happy, but they should take care of and they should give the benefit to the student regarding this particular question. This is my ardent request to the examiner and to the institute, because in this question you cannot transfer anything to profit and loss account, because our investment will get cancelled in the next year in 24-25. Actually, question should have asked how much amount should be transferred to profit and loss account in the year 2024-25. This is the only anomaly in this particular question. or in this entire question paper. Otherwise, I'm very happy, very satisfied, and institute has done a commendable job. But only thing is that they need to improve their own study material a little bit, correct, so that a student can completely rely upon that. For example, the question which I was talking about, correct, this question, a chain holding question, this question was taken from CA final past examination paper. Of course, because in our study material, as you know, we have not only included everything from your module, but we have also included almost everything from CA. That is why we always play on the safer side, and that is why those students who have subscribed to our courses, they must have seen that this question was there in our study material. So that is the reason. Anyway, now we come back to this particular question. Otherwise, you can solve this question very easily. Now, in this particular question, it is given that you got additional share, correct, additional stakes, and you got additional stakes of 40% for rupees 6 lakh. And it is also given that when you acquired additional stakes of 40% on that date, the fair value of your previously held investment, which was 420, now has gone to 450. This question we have already done. So I have solved this question here. Fair value of fair value of net assets of B Limited on the date of acquisition is 12 lakh. So NCI will be 25% because now we are having 75% stakes. So 25% will be NCI. So 25% of 12 lakh, 3 lakh will move into the what we call bank of NCI, and the remaining will belong to us. But out of this 9 lakh, 12 lakh minus 3 lakh, out of these remaining assets, I have written here share in net assets on account of previously held investment. On the date of acquisition, previously held investment is equal to, there is no concept of bonus mark, right, KMK? It is not there, definitely. Share in net assets on account of previously held investment 4,50,000. So that means out of 9 lakh, no doubt acquirer is having a stake of 9 lakh, but out of this 9 lakh, 4,50,000 is accruing to us because of our previously held investment. So I may say that on the date of acquisition, because of additional investment, I am getting hold of 4 lakh net assets, and we are paying 6 lakh. So your goodwill will be equal to 1,50,000. But as I told you, this question is not correct, and moreover, when your investment moved up from 4,20,000 to 4,50,000, again you will have to pass this particular entry, investment account debit to OCI account. But this amount you can take to profit and loss account only in 24-25 and not in 23-24. So this question is correct, but I think they committed a slight oversight. I should not say it's a mistake, it's an oversight. So I'm very sure that Institute will give you the benefit of this. So your correct answer, if we consider that Institute is interested in knowing ultimately how much amount is moving to profit and loss account, so ultimately your total amount which you will move to your profit and loss account will be equal to 1 lakh. Because total amount accumulated in OCI is 1 lakh, you will transfer to what we call profit and loss account 1 lakh, because your earlier or previously held investment will get cancelled. And again, I have passed this entry, and I have also given you the amount of goodwill also, because question is also asking you the amount of goodwill. One student asked me, actually my answer is correct, your answer is correct. He gave me WhatsApp message actually. So his answer is correct, but his answer is wrong, not because of the fact that you did wrong, because the question asked wrongly. That is the reason. Okay, Rahul Jaju, you have written 1 lakh. Okay, nice to see that. So with that, and I remember one thing, I haven't solved question number 2. I'm giving you a net answer, but problem is that both these questions have been taken from CA module, not from what we call any other. That is why I am telling you, and these questions are there in our study bank, so no problem. Because I am very sure that none among you must have gone for question number 2. That is why I left it earlier. But those among you who have solved, they can have a look over the solution. I have done the solution here also, correct? So this is how the solution will be. But I will explain all these concepts when in a separate class. And there is no point in if you haven't attempted this question. And regarding this question, question number part B, your net answers will be like this. If you have attempted, carrying amount at the end of the 4th year will be equal to this much, correct? And then you will compare it with the recoverable amount. The recoverable amount For that, fair value less cost of disposal will be equal to 24,500. And then you will have to compute the value in use. Future benefits are given and their present values are given in the question. You can compute it. And now you will pick the higher figure, which will be equal to this much. And ultimately, you will be able to find out your impairment loss. Those among you who might have attempted this question, for them, actually, I'm telling you, I have solved each and every question. So you must have noted, actually, how quick and how well, actually, we are into this particular line of trade, so as to give you the best rather than do the things in a hurricanree. It is always better to show a bit of patience. So these are the full-fledged solutions before you. Now, for God's sake, don't ask me and don't flood me with the messages for the sheets. As you know, actually, every year, in fact, after every 3 months or 4 months, actually, we keep on getting our new editions from our publishers also. Correct? Although there is no change in the content, but this paper will be added over there. As you know, my book gets published from Commercial Law House also. And there is a foundation upon me. I cannot release it on public platforms. So that is the reason right now I cannot share, but I can promise you, most probably as and when, and most probably within next 15 days, book will get published. So after 15 days, I will share the sheets. Correct? So try to understand my predicament also, because I have to actually do something for you under tremendous amount of pressure. You do not know. Even my publishers were telling not to actually release the sets. And I told them, if that is the case, don't publish my book. Then he got scared. So for you, I am ready to fight, but I do not want to actually make him angry also. So with that, we come to the end of this particular session. So on my part, I have done everything, every solution, most, you can say, standard solutions. Correct? I hope you will agree to this particular point. And I will also upload a separate video after 2-3 days wherein I will give the in-class solutions also. But I think those who have already given the paper, there is no use for them. But those who will be giving the paper in the next attempt, definitely they will get the benefit. On such count, it's time to say goodbye. But before that, you tell me, how was your session? And ultimately, how was your profession? How was your what we call paper? Be honest when you tell me. And how you like the class. Sir, in consolidation, I adjusted bills payable and receipt payable. Is this correct? Yes, absolutely correct. Absolutely, you will get the solution. Correct? After 15 days, I will release the sheets. Don't worry about it. But my total get tallied, sir. Great, 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 great. It's great, it's great, it's great. Great. Fine. And then you can match your answers also later on. Rahul Jadhu's session was good. Paper was also good. So nice of you. Kindly spread the words also. I want other people should all get the benefit of this session, and they need to know the best quality is where lying right at this particular moment. And many of your friends are under an impression I don't teach in Hindi also. Tell them actually we have separate version in English and separate versions in Hindi. Totally amazing class. Thank you so much. What about others? For them, it is a boring class. For that, I apologize because I'm not well, as you must have seen through my voice also. Starting said institute. Well, we'll take that. I have already told you the questions. Actually, all those questions are already there in our module. So on that count, you need not require to actually worry about. Correct? All questions are there in our module. You must have noticed that. So from wherever they are picking up, as I told you, actually past papers of CA examination, but that doesn't mean that you need to do each and every question. Such questions which have appeared in the past examination of CA paper and which have a little bit of what we call correlation with your and compatibility with your syllabus, only those questions are being asked. Don't worry about that. Boring to aap hone nahi dete ho. Thank you so much. ठीक है, अच्छी लगी क्लास तो थोड़ा हिंदी भी बोल लूँ मैं बीच में. बहुत से लोगों को ये लगता है कि सर इंग्लिश में ही बोलते हैं और हिंदी में नहीं बोलते. थैंक यू सो मच सर फॉर दिस वंडरफुल सेशन एंड आई एम फीलिंग ब्लेस्ड टू बी योर स्टूडेंट. ओह सो ग्रेट टू हियर दैट. धरानी Thangawal, correct? I'm sorry that I might have not pronounced your name quite well, but anyway, it's so nice. So nice to meet you all. I also get vibrations. I also feel myself to be young because when I'm talking to the young minds, although now I'm 57 almost, So, now allow me to take leave of you and shall meet you soon with something new. Remember one thing, even though, and we wish that each one of you come out with flying colors and you reach the pinnacle of the success, hallowed pretense of the success, correct? And we always pray to the Almighty, as I keep on saying, to shower supreme amount of success on each one of you. So even though actually you have completed your final level, but be in touch, because as soon we are going to make you meet my past students who have already reached the positions of height. Correct? For example, Shilpa Banerjee is there. One such name coming is springing to my mind at this particular moment. She will be the first candidate to whom I'm inviting, and she will give you lots of inputs, correct, how you can, what we call, increase your success graph. So on that count, we take leave of you, and through this particular medium, I'm also requesting to all those students who have been taught by me and who have already reached some higher position, correct, they need to contact me, because soon we are starting a series, correct, where I would like you to, and I'm going to hold down a what we call one-to-one meeting with each one of you, so that you can give a fairer idea, because many students I have seen, actually, they are under it. So remember one thing, keep your eyes open, and more than that, mind. You have a wonderful scope still. Don't be under an impression that CMA is not having scope. Some people are spreading such words or like that. Absolutely rubbish. You still have a wonderful scope. Only thing is that you need in-depth and high quality, what we call, a study. That's the only thing, only requirement. I will make you meet another student of mine who just did CMA intern. And in the interview, there were nearly, I think, 482 candidates were there, and he hasn't yet completed final. He hasn't reached final. He is in inter, and he has been selected. He has been offered a car worth rupees 40 lakh. I'm not even. I think his name is Abhay or something like that. I will also invite him, correct, so that you get a bit of what we call idea, correct. Every knowledge which you acquire will never ever what we will go a baggage. It will always help you. Okay, then bye. Shall meet you in the next session, and spread it among your students regarding this particular session. On that count, we take leave of you.